Hello everybody, it's Gordon Stone here from the Agri-Business Development Institute, joined once again by Brett Collins from CroweHorwath. Evening Brett.
Hi Gordon.
So tonight's webinar program is about a thorny, hoary chestnut, which is about managing our money, our financials. So I guess, as I always do, I like to take us back to the beginning of the story. Our focus in any of the programs, any of the work that we're doing with our clients is creating a high-performing, self-managing, saleable and profitable business. The reason for that is very clear, because our objective is to help people work at a higher level on their business, to take time out to work on their business. If they're in a position of bringing other people into their business, it's an easier and better proposition if it's a self-managing business. If they want to sell it, we want them to have the maximum value. The only way we can do that is if we understand the money flow. So tonight, this program is also part of the Beef Business Mentoring Program. And the Beef Business Mentoring Program is supported by our company, by Meat and Livestock Australia's donor company, AgForce, the Queensland Government, and of course CroweHorwath, which is one of the reasons that Brett's with us tonight. So that's, I guess, some background to what we're doing tonight and why. Just a tad of housekeeping. We're very well aware that we have checkered line speeds, downloads, all of those sorts of things, and we're aware that many people are joining us by phone. So generally speaking, we will send out the recording of this afterwards. So for those people who want to ask us questions, we avoid questions generally, simply because it keeps that internet-based process happening quite happily. The people who are joining by phone also don't feel disadvantaged. So let's keep on going then. And by the way, one of the things that will crop up at the end of this webinar is that you'll be asked to provide us a bit of feedback, which we'd appreciate, because it helps us think through our series of webinars, of which this is the first, about financial fundamental details. So here's a quick snapshot of Brett, quite a good looking bloke, as you can see, based in Toowoomba, Agribusiness partner with CroweHorwath, and you can see the specialties that Brett's involved in there. Anything you'd like to add, Brett?
No, there's plenty said there, Gordon.
Okay. Thanks, Brett. And for people who are regular attendees, you will recall that I often talk about the 12 pillars of business best practice. So tonight, a really quick snapshot. What are these 12 pillars of business best practice all about? We know that business owners, including in the agri sector, are very comfortable about doing the things that they know best. It might be what livestock, what nutrition, what soils, what inputs, what grain varieties, what broccoli to grow, for example, all of those sorts of things. Our research tells us, and our work with clients tells us, that they get frustrated with the business bit that sits around that, which is all of these elements of business best practice. So we always observe, in a high-performing business, you've got to be clear about everybody being on the same page about where the business is going. You've got to think very specifically about how the business will grow, which is what our Pillar 3 is all about. Thinking as the CEO of a high-performing business, who's then going to manage people. And sometimes that's a frustration for CEOs or business owners, and often there are family dynamics that come into it as well. The reason we talk about systems is because systems are a way of managing people and are a way of managing money, which is what tonight is all about, and systematically engaging with the marketplace. We're always concerned about risk, business risk, legal risk, and of course financial risk, which is, again, what tonight is all about. We're always, I guess, encouraging people to engage with the customer, to engage with people in the business as well as external to the business, hence communication, sales and marketing, and one of the ones that we love dealing with is value adding. So how can we get more for what we do? So that's a nice little entree into the financial fundamentals. So tonight I'm going to give you a quick overview, a snapshot of the high level material that we've done before as a reminder. So that will start our agenda. Then I'm going to hand over pretty much to Brett to go through the 7 core financial fundamentals which actually sit underneath the bigger picture structure that has been put in place. The next element of this, and what we'll finish up on, is how we're actually going to get started on making a difference. What are the things that we can do right now to make a change? Right, so let's keep going. Let's go back and take the helicopter view about the financial fundamentals, where we set things up at the beginning, and I'll ask Brett to make a comment about this at the end. The financial fundamentals are basically to ensure that people are thinking about the profitability of their business today in the context of the future. We actually have a definition that we use about sustainability, and it's all about the marketplace. It's all about thinking about the global and domestic market business environment, simply because life is changing. And the professional, high-performing, self-managing, saleable business operators are saying, I need to think differently and operate differently in this broader marketplace. That means we take a business-like approach. The reason we've got that pillar in there about thinking and acting like a CEO is the CEO's job is to drive this corporate approach. Our focus is always on the cash because, like our first pillar, we want to drive where the business is going to go. We want to drive where the money side of things is going to happen. So it's in a proactive sense. And the holistic approach is to think about all those key drivers about our money. And for many people, they find money almost a frightening concept. So that's the reason we're demystifying it with these 7 key principles. We also have recommended that people have got to think long term. Succession for us is not a short-term thing. Succession for us is actually business growth. It's business transition. It might be bringing an investor into the business who could be a family member, which is what we often talk about. It could be the bank taking a different view to the business. So we've got to think long term. We've got to think about at a corporate level, reduce risk, and the thing that I love is the idea of setting a business up that can be sold with increased value, which is what that final dot point is about. So Brett, before we move on, is there anything you'd like to comment on that will draw all this together?
Well, I think the key thing here, Gordon, is that the CEO mentoring program coming up with these 12 pillars of business best practice, what they've been able to identify in there is that financial fundamentals are a critical factor in allowing the investment back into your business to ensure that we meet business best practice. So if we don't get the financial fundamentals up front correct, the profitability, sustainability, growth, investment, all those key things Gordon has been, and making money that Gordon has been talking about, really is paramount, having financial fundamentals in place and in the most appropriate form that it can be.
Okay, thanks, Brett. So let's move on. So the setup for all of this is we've got to manage our money. We've got to think differently. We've got to take very much a corporate approach and manage our money in an orderly fashion. So the 7 core financial fundamentals are built around these principles. It's critical to understand the reports. So we often talk about profit and losses and things, but do people really understand them? That translates into understanding those key profit drivers, which is where does our money work, what are the levels of profit, and also the forecasting and budgeting process, which is a thing that we'll discuss tonight, built around what we call a 3-way cash flow budget and forecast approach, which leads us to be very clear about what we'll talk about very briefly, which is the idea of managing our money, management accounting versus compliance. And so we're monitoring and evaluating what's going on, taking a very disciplined approach. And we use this word, which I know a lot of business owners don't like, which is data. But fundamentally, these reports that we've talked about so far are to give us the data to make those decisions. Then we're going to talk benchmarking, which is about externally with others, but most particularly, how are we going against the objectives that we've set for ourselves? Of course, timeliness, and of course, thinking about those other higher level financials. And if Brett was making a comment about this, he would say, remember about the banks, remember about the tax office, remember about return on investment to other people involved in the business. So all of those sorts of things are elements we're going to briefly touch on tonight. And the reason we're setting it up like this is we're trying to dig down into another level of detail so that everybody says, these are some questions I need to ask my advisors, or these are the things I need to talk about within my family or the other financial stakeholders in our business. So Brett, I think it's time for me to hand over to you. I've given a quick introduction into these basics. Can you just take us through what the basics are, why they're so important?
Well, to start with, Gordon, I suppose in the next several slides that we have here, we are going to talk about these financial fundamentals, component by component. But the key one we start on is the basics. What you normally see when we talk about a financial piece each year for any style of business or any industry, and that is we normally get a phone call from the accountant outlining that your tax return is due to be lodged shortly, and you send a disc in or the information into the accountant, and a profit and loss balance sheet with a tax return is completed over the next 8 weeks to 10 weeks. It's forwarded out to you, you sign it, send it back, it gets lodged. And that's where it sits. Well, those days really are gone due to the requirements of business in this market to be sustainable, profitable, and to make money, and also position this with the strategy, your business, for go-forward succession. So outlining here is we need to get clear on what the basics of your business are, as outlined here is why we do this, and also it's very important to monitor what is going on. So there's two pieces above. Not only is it the profit and loss and balance sheet, but we're also looking to put in place a cash flow position as well as key budgetary controls which actually go together.
So Brett, there's a question I've got to ask around this, which is we talk with people about compliance and we talk to people about management accounting or management of their money. How do these basics help people manage their money?
Yeah, so in my opinion, the compliance piece, it's simply what is asked of you by, i.e. the tax office or banks or that type of reporting piece. So a compliance is simply doing what you are required to do because you have an entity structure set up. Where the management piece comes into it is that on a regular basis there should be management reporting within a business and a review of that performance in the management model on a regular, consistent basis.
So my take-home message is regularity, consistency, checking on the numbers, how they're going, and doing that on a regular basis so you keep on trend or understand hiccups.
Absolutely. So the traditional way of doing a set of financials or talking to an accountant 8 months or 9 months after year-end finishes at 30 June, I don't see that as a value proposition for any business. What is important that you're actually talking prior to 30 June and then very soon after 30 June you're actually doing the compliance piece, but also regularly throughout the year having a consistent management process where you do have your internal management as well as external advisors working with you on whether it be monthly, quarterly, biannual.
And we often talk about quarterly reviews,
yep,
monthly board meetings.
Yep.
That's where this
Absolutely.
data gets delivered and discussed.
Correct.
Sure. Thanks, Brett. Let's move on. So if we're thinking about we'll call it the management of the money, then we've got to be thinking about these key profit drivers. Can you just take us through your formula there and why it's important?
Basically what we're saying is cost is important and income is important, and that's what drives profit in very simple terms. Often people will say the best thing for us to do is cut costs, that'll drive profit. Well, common sense will tell you that in formula, but that doesn't mean it is the best thing for the business. Driving revenue per item, increased profit, as I've said down the bottom, that also does drive profit. But what it is important is that you're actually doing this high-level management reviewing on a regular basis throughout a year to determine what is the best thing for your business in a timely manner, not months after year end and once or twice a year, and really running your business by watching what sits in the bank account. Those days are gone.
So if we're thinking of this high-performing business again, and I know the discussion that we have is often around different business units in the business, which might be livestock, grain, horticulture, whatever else it may be, and there might be other offshoots, then what we're saying is we want to be on the case of all of those that data, because that's the point you've made here about the why, which is if you need to influence the profit going forward, you need to know what's going on now.
Absolutely, and that can come down to divisional reporting. So you can have in a beef environment, you can have paddock, you can have feedlotting, you can have other areas of your farm that you can identify from a grain piece, that type of thing, and it's about divisional reporting and understanding what you need to do in each of those divisions within your farm to make it the most profitable and sustainable.
Okay. Now, I like the item at the end, which is increasing revenue per item to increase profit. So the first dot point says we know what's happening with all the business units.
Correct.
Sure, we can cut costs, but then the final piece is, well, if we've got a particularly profitable part of the business, how can we grow it?
Correct. And if there's business parts that are not going as well as you would hope, well, why are they not? And that will lead on to further discussions in these fundamentals as we go forward.
Okay. Thanks. Let's keep going. So we're always encouraged to budget and forecast. So here you're talking about 1 month, 3 months, 6 months, 12 months, and the three-way cash flow budget and forecast. So could you elaborate maybe on that timing issue as well?
Yeah, so what I'm really commenting on there is that everybody does sit down, or they have good intentions to, at the start of a year, whether it be financial or calendar, and they try to put together a budget or what it will look like for the next 12 months. So what is critical about this budgeting and forecasting fundamental is that it does give you this roadmap of where you expect the business to go. But if you then put that in your top drawer, or maybe call it the bottom drawer, and don't look at it throughout the year and actually assess how you are performing against your expected budget, you are going to bump into hurdles, because things happen, as we all know in business, on a daily basis that can affect in a significant way an original budget or what you forecasted to happen. So we need to be managing that on a regular basis and assessing it on how we are going, because also direction changes throughout a month or quarter, and you want to be across that.
An opportunity might knock.
Opportunities knocking every day.
Sure. So I want to draw, I guess, our attention to that last dot point, which is, so we have this process called a defined end in mind. So we're encouraging people to specifically think about how they want to grow their business, say in 5 years or 10 years. So it's financial, it's even the outcomes that the business owners want, if they want more leisure or go on holidays, or if they want to get involved elsewhere in the value chain or whatever else it may be. So what we talk to our clients about doing is having this fairly clear endpoint, breaking it down into 3 years, 2 years, 1 year, 6 monthly outcomes, and then quarterly. So is this what you mean by the whole roadmap process from a money point of view?
That's a very high-level strategy piece there. I'm not saying so much from a financial piece. To go and try to position in a financial form a 3 to 5 year budget or forecast that is going to be deemed practical, that's a long way out. What I'm trying to say is we need to get a little more concise and in a timely manner be producing something across a monthly, quarterly, biannual, annual, and revisiting that on a regular basis. The 3 to 5 years is far more strategic, and that revolves around what you do with your land going forward, succession, etc. So I'm just trying to keep this concise and in a timely manner that it's revisited.
Okay, so back to that kind of regular management update.
That's your roadmap. Yep.
Okay. So let's keep rolling. So likewise, I like the idea of monitoring what's going on and evaluating how we've gone against the objectives that we've set. Because if we're looking at a monthly, quarterly, 6 monthly, annual basis, we want to be able to look back and then look forward. So how does all this reporting help us do all that?
Well, what happens here, I suppose, we've talked a little bit about this consistency and the discipline and that type of thing that I've got there. I think what's important is that generally when we have a client who we are working with, what we try to identify to them that it's actually not as difficult as they think. When they look at their farm, it's a very holistic approach.
Yep.
So they actually may have, as I said, just for an example, a feedlot. They may have livestock that are, they're turning over, and they may have grain, and they may have paddock piece. They may have fattening blocks. And they go, well, it all molds into one. How can you possibly distinctly and be disciplined in separating that into divisional reporting, so you actually do know areas in your business that are going very well and functionally look at ways to improve areas that are struggling, and you actually can do that, and there is a way of doing that. And that's about ensuring your systems are up to date, timely, and being regularly reviewed.
Sure. So you've made the why in here about higher gross margin products. What are you thinking there?
Well, what we're trying to identify there is what parts of your business need attention.
Yep.
What parts do we need to focus on to ensure that we are getting the highest gross margin for your farm, whether it be livestock, feedlot, cropping, paddock use, etc. So that's what I'm saying there. We need to be identifying and be disciplined to be able to divisionalise and understand what are the areas where we can get the highest gross margin from.
Yeah. And once again, look at all those high-performing or lower-performing divisions, and there might be reasons why they're not performing so well.
Absolutely, because there's also a what we call, I suppose, because we're talking this mentoring program, there is a corporate piece to it. So there actually is part of everybody's role on the farm that actually is about managing the farm. Yeah. So it's actually being able to identify where best time needs to be spent. Mm. And if it's going very well, why not keep driving it?
Okay. So return on effort, but keeping an eye on what's going on.
Spot on.
Okay. So I guess in agriculture we often talk about benchmarking, and the thing we often talk about is, well, how am I going against everybody else? Mm-hmm. And then we talk about the internal side of it, which is how am I going against myself? So how does all of this work from your point of view, the industry averages and so on?
Yeah, this is a very interesting discussion we have with our clients, and actually it's across all industries. But in regards to agri, what we have developed is a benchmarking piece where, whether you're in cattle, sheep, grain, we have an idea of what the industry, and like from a location point as well, that we can actually assess on average how your business is performing against similar businesses in your, we can call it industry, but also geographical location. Mm-hmm. So that's what we actually do. It doesn't mean if you're not meeting benchmark that isn't good. Actually, you may be doing the right job and the benchmark may be doing the wrong job. Gotcha. Benchmarking is simply a clear indicator that if you are differing from industry average, why are you? What are you doing different, and what is the ultimate result of you doing that?
So basically, if you've got your data, then you can look at how, why and what. Spot
on. And I think doing a benchmark, there is a lot of groups out there that do performance reviews of an individual farm, and there's a lot of this benchmark, they talk about benchmarking, but it's quite critical that your benchmarking focuses on what your farm is really doing and in the same geographical location that you're reporting on, not just an industry based across Australia, because each geographical location is different from climatic conditions or prices or whatever it may be.
Okay. Thanks, Brett. So we'll move on now to the issue of time. So I noticed you say we won't wait until tax time. We want to be quite timely in everything that happens here. And you've said the front foot.
Yeah, so the key thing that when we started this program, and even back talking to Gordon and ABDI, was just around timeliness of reporting, or from a management point, addressing that it's not a once a year or an ad hoc discussion with your external accountant, banker, lawyer, whoever it may be. It's about getting on the front foot and having regular meetings. The first point of call we had when we started working on this and talking to clients was they said, well, we already spend X dollars with the accountant, and what we get back from that, we're happy to just keep doing that. But that's just about doing your financials and your tax return, doing the compliance things, as we say, months after year end. When we started talking to them about doing that on a more regular basis, such as quarterly meetings, all of a sudden the client started to consider the proactivity of those meetings, and that the actual cost of doing that compliance piece, as well as the regular management piece, was not that significantly different, because your information is being done all year round. So when it gets to year end, it's not such a big compliance piece, and we're actually finishing it in July, August, September. So therefore, the people that are very interested on how you're going, which is the shareholders or yourselves, the owners of the business, as well as the banks, actually have timely information where you can make a decision as you're going throughout a year about what needs to be done on the farm to improve that sustainability and profitability. Okay. So timeliness is critical.
So Brett, I noticed there, because I know we've talked about this many times, and we once again are talking about the idea of the proactive meetings, board meetings, all of those sorts of things. But in practice, you've got tax consequences, debt repayment, and cash flow shortages. So I know in agriculture and many businesses, cash flow shortages are a killer. And more to the point, if you've got a tax bill coming up and can plan for it, or can be quite strategic in how it's dealt with, I'm presuming that's what that's all about.
Absolutely. In agribusiness, it can be sometimes a cash flow can't be set up like a normal operating business in a different industry. It can be quite sporadic, the income piece, and it depends on, as I just said, climatic conditions. So what you're able to do is you do set a forecast up front or a budget, and throughout the first quarter or second quarter of the year or third quarter, you're actually reviewing that and where it's at. And instead of you getting through an installment, a tax installment, because you've just lodged a tax return 7 or 8 months later and you didn't know that was coming, that tax payable, and then there's a quarterly installment on top of that, i.e. the old double taxation piece. Yeah. What we're doing, because we're looking at it on a more regular basis, there's no surprises anymore. And we're actually looking at it before year end, so we're talking to clients really 12, 18 months in advance of what their tax implications are going to be, and you don't actually pay an installment if you don't need to. Yeah. So there may be a variation of that. So what it's doing is we're actually ensuring that you are keeping an eye on your tax consequences. You are actually ensuring that the cash that's in the bank is what should be in the bank, and it allows you to meet your debt repayments, affects that cash flow shortage piece, etc.
Well, I mean, the notion of doing the variation is quite a critical element, because if something's coming up.
Well, it is in agri, because you lodge a tax return 8 or 9 months after year end. A lot has happened in this current year you're in, so there needs to be, if you're looking at it more regularly, Gordon, you alleviate some of those implications that may arise by paying an instalment when you don't need to, or that type of thing.
Okay. Thanks, Brett. We'll move along to the final one of these, which is about the financial strategy. So I guess we've started to touch on a few of those points. Would you like to just take us through the remaining pieces of the puzzle?
Well, I think the key thing to, I suppose, not summarise or finish here on, is what we're trying to identify to people is that there is so much you need to do in operating your business that a financial strategy, and I've just outlined a few things there, as you can see at the top under the what's, the tax implications, capital, trying to maximise and get that profitability happening, and you may have different stakeholders and different people with different intensities around things. And what you also have is external interested parties such as your bank, and the bank has changed their risk appetite as well, as all of you would know who is listening to this. The days of having a handshake, those days are gone. There is now a very strict regime that needs to be followed to ensure that their risk appetite for your farm or your investment that you're looking to do on that farm is met, and what they require. So what I'm trying to say here is that there is so many things happening in the financial marketplace and for your business that if you're not having these regular strategic meetings, well, on a quarterly or monthly basis, I think you're actually missing opportunity.
Sure. Okay. So let's just, I guess, make sense of all of this, because we've got 7 principles there that we've gone through, and the question always is, for a person who's going, well, this is actually not my strength, or I need to have other people sort of involved in it with me. What are these 3 things that we need to do to get started, in your opinion?
What is very important is to understand your current reporting system to make sure that it's accurate and it has timely information in it. That's the first and foremost point. You've got to assess your current financial position. It's very easy to sit back and to say, I can do that or I can't do that based on interpretation or opinion. And when you have a farm, there is normally many interested parties on that farm, whether it's the husband and wife or family or external investors. There is many different moving thought processes. So what's important is understand exactly where you're at. What are your net assets of the farm? What are your strategic things you would like to do on that farm over the next 12 months to 3 to 5 years, and work out how you do that. And I just think this point 2 here, where develop a regular and recurring process of reviewing, that is the key things that we have implemented with our clients, Gordon. Mm-hmm. That is something that no longer are they worried about coming to the accountant or ringing the accountant because they're worried about costs, because they're getting no proactive advice. What they're finding is that it's now value that they're getting. And these quarterly meetings, we don't just simply sit there and just stroll through numbers, or we actually start to talk. That's where we're at. That's actual versus budget. What is also then the financial strategy we've put in place? What's the succession plan? Are we on track to achieve everything they require? If you need to get some more farm assets, those types of things. So it's far more than just simply looking at profit and loss, so things are going okay and that's the profit. It's much wider than that.
So it's a bit like we say with the people who are involved in our CEO mentoring program, which we'll come to in a minute. If they're working on their business, then they can see things that are coming up. If they're the CEO of the business, then it's actually their responsibility to be able to drive that business to meet the needs of the financial stakeholders, shareholders, whatever else it may be. And I guess we've all got a responsibility from a compliance point of view to banks, ASIC and everybody else. So this way we're on the case, so to speak.
Well, you're actually actioning it in a timely manner. Mm-hmm. So you're not just looking at it yourself and trying to make sense of it, and does it fit your strategy you have in your mind, or what you've said to family members or that type of thing, or the banker or whatever it may be. What you're actually doing is documenting it.
Sure.
You're documenting the process. You're actually positioning financially where you're at on a regular, timely basis. You're making tax decisions in a timely manner. You're not doing it some 8, 12 months down the track and being surprised. And those, as I say, those days are gone due to the environment, the financial environment we all live in now.
Okay. So this is actually a nice entree into the idea of the CEO concept. And the reason that we keep on talking about the idea of the CEO of a high-performing, self-managing, profitable, saleable business is that at the end of the day, someone's got to drive the bus. And if the person's driving the bus, we actually want them to be equipped with resources, knowledge. So we've said here, the job of a CEO, no matter what size of business, is to be disciplined, to take responsibility, to look at risk, to be accountable, and to keep everybody on the same page and keep that momentum happening. And from my perspective, and I'm interested in your comments on this, it's always going to revolve around the money.
It revolves around 2 things. Mm-hmm. I think clear communication.
Sure, absolutely.
Is number 1. Every interested party must have a clearly communicated message to them that they understand and actually can identify with.
Yep.
Then the next piece is, if we don't have a financial solid basis that we're working from, well, and that's understood by all of the interested parties, how can we develop and grow and make our business sustainable and profitable in the future? Mm.
So fundamentally it is about communication, you're right, and keeping an eye on the cash.
Yep.
Okay, so Brett, I guess we're going to do something a little bit different tonight, which is we often talk about what the mentoring programs are all about, webinars like we're doing tonight, which is item 1, our one-day workshops, which is the opportunity for people to do a stock take, to become the outsider looking in. You've already mentioned the notion about the 12-month CEO mentoring program, and we've already done some work in the program and outside with some people who've said, look, we actually need to change our way of managing our money, we'll call it. How do we implement those financial fundamentals? Have you got some examples of, from your perspective, the change that's occurred, maybe the benefits that's been achieved, maybe even the peace of mind that comes with some of these I guess, this more proactive approach and regular connection?
The key thing that this CEO mentoring, and this is definitely not a sale for the program, it's actually fact. Since I have been involved over the last 12 months with Gordon and his team, it's actually, they identify, yes, key areas that the CEO or the parties that are working in that family business, the owners of the business, they're able to identify these pillars of success to get best practice. But the key thing that really comes out of it, and what I've noticed in the attendees at this mentoring program, really revolves around education, Gordon. Yeah. They come out of it and are regularly identifying immediately during the program and throughout the program ways that they can better, or things they can better adopt in their business. They are highly educated by the end of the event, and I think really they not only understand the financial piece, which we're talking about at length tonight, but they actually understand their business far better as a whole. So it's all about, what I'm finding with this program is education.
Sure. Well, thanks for that, Brett. Because its focus is unashamedly professional development, getting an education.
Absolutely. And I think too often, as you said early in the preempting of this webinar, revolved around working on your business, not always in it. And that's something that also every attendee, it's amazing when you then stand around and have a chat after the program, they all say, wow, there is so much we need to be doing on our business.
Sure. Okay. Well, let's draw this to a close, and thanks for those comments, Brett. So as is always the case, here's an opportunity if anyone wants to talk to us. So you've got my phone number there, you've got Brett's phone number there, you've got Mark McNamee's phone number there. So any of us are available to take a call if you'd like to. If you don't feel comfortable having a talk to us, then AgForce or Department of Agriculture in Queensland are all aware of what this program is all about, and you can always make inquiries there. So, and the other offer that we always put forward if we do one of these fundamental sessions, if somebody says, look, what you've done is struck a chord with me, or I need to get somebody else to sit on the end of a phone or whatever else is with either one or both of you, then the offer is there, and a number of people have taken it up with us. So once again, Brett, a 30-minute discussion with people who say, look, I really want someone to talk to and think differently.
Yep, and we've found that this has been taken up by numerous people, and I think they've actually got a lot out of that.
Yep. And that's, I guess, collectively as a group of partners behind the beef program, and obviously CroweHorwath being a partner in the wider program, that's our contribution to giving back to people who say, well, I want to get some feedback. So,
absolutely.
So Brett, thanks very much for your time once again tonight. We have to go back to our disclaimer as always, which is to remind people that this is one of the things we talk about in the program. We need to understand our legal implications and all of these sorts of things. So thank you for your time once again tonight. For all those attending, we hope this has been beneficial to you. If you'd like to have a chat to us, fine. Also be aware that this will come out as a link afterwards. And as you sign off, if you're on a computer, you'll see a little pop-up questionnaire, and we'd appreciate it if you could give us a bit of feedback. Helps us fine-tune and refine things that we're doing. So Brett, once again, thank you for your time, and thank you all for attending. We hope this has been useful and relevant to you.
Thanks, Gordon.